Lesson 6. Understanding our banking system. Banks are typically a big part of our life. At a bank, we deposit our paychecks, take out loans, and open savings accounts. What then do banks do? What are the many sorts of banks? Let's start by looking for solutions to these issues by examining the many sorts of banks that comprise a financial system. A banking system is a group or network of companies that provide financial services to us. These companies are responsible for maintaining a payment system, issuing loans, receiving deposits, and aiding with investments. Functions of banking system. Banks, whether physical or virtual, handle the movement of money between people and businesses. Banks, in particular, provide deposit accounts, which are safe places for customers' money to be kept. Banks lend money from deposit accounts to individuals and companies. In exchange, the bank receives interest payments on such loans from the borrowers. Part of that interest is subsequently returned to the original deposit account holder in the form of interest, typically on a savings, money market, or CD account. Banks generate the majority of their money through loan interest and fees charged to their clients. These costs may be associated with specific items, such as bank accounts, or with financial services. An investment bank, for example, that provides portfolio management to investors may charge a fee for such a service. Banking is a tightly controlled sector. The Federal Reserve System supervises banks and other financial institutions and works with state regulatory bodies to ensure that banks follow the required criteria. Other government agencies, such as the Office of the Comptroller of the Currency, OCC, the Office of Thrift Supervision, OTS, and the Federal Deposit Insurance Corporation, FDIC, regulate banks, FDIC. Types of banks. The term bank refers to a variety of distinct financial entities. Understanding the various sorts of banks is important since they are not all the same in terms of the services or goods they offer and the duties they perform. Some are consumer-facing, which means they serve the general public directly. Others play a more strategic role in the economic movement of money. Take a look beneath the banking awning. Central banks. Central banks oversee a country's or group of nations' money supply. These institutions are in charge of developing monetary policy, monitoring currency movements, and establishing interest rate benchmarks. In a nutshell, they are the foundation of a country's financial system. In the United States, for example, the Federal Reserve is the central bank. The Federal Reserve System consists of 12 regional federal banks. The Federal Reserve earns money by paying interest on the securities it holds, and the bank's net revenues are remitted to the United States Treasury. Banks in the Federal Reserve System are responsible for 4 distinct tasks, which are as follows. 1. Supervising and examining state member banks. 2. Lending to depository institutions. 3. Providing critical financial services to aid in the management of the nation's payment system. And 4. Examining financial institutions. These services are critical to how banking works in the United States, allowing you to accomplish everything from swiping your debit card when buying online to applying for a mortgage. Retail banks. Most people think of retail banks when they think about banking. These banks provide loans, deposit accounts, and other financial services to individuals and small businesses alike. Retail banks can be physical establishments with branches or online banks that allow you to handle your money only through an app. Non-bank organizations that provide banking services may also fall into this category. For example, a rising number of fintech businesses, known as neobanks, provide deposit accounts similar to those found at banks. These firms collaborate with existing banks to provide FDIC-insured banking goods and services, despite the fact that they are not banks themselves. Commercial banks. Commercial banks primarily serve the requirements of companies or corporations, although they can also serve the needs of individual banking consumers. Commercial banks, like retail banks, can provide loans, provide deposit accounts, and provide other banking services, such as international banking or payment processing. In general, commercial banks offer a wide range of services. For example, a commercial bank may provide real estate or business equipment loans, charging borrowers interest and fees for the privilege of borrowing money. Commercial and retail banking services can be provided by the same financial organization. Investment banks. Investment banks can engage in securities trading, handle investor accounts, or conduct a combination of the two. An investment bank can operate as a go-between for investors looking to engage in the markets by assisting with the acquisition or selling of securities. They can also provide customers with investment advice. Investment banks provide various purposes in addition to supporting regular investors. For example, when a firm is considering its initial public offering, it can help with the underwriting process, IPO. An investment bank may also assist business companies with mergers and acquisitions. Shadow banks. In terms of what they perform and how they are regulated, shadow banks are not like ordinary banks. These non-bank financial firms are largely unregulated and primarily invest in credit and debt securities. Shadow banking organizations include insurance businesses and hedge funds. Credit unions. Many of the same services are provided by credit unions, which are also known as cooperative financial institutions. The difference is that, unlike retail banks, credit unions are not for profit. Credit unions are founded by members who combine their cash and govern the organization. To open an account, you must be a member of a credit union. These criteria may be based on location, occupation, religious membership, or military service. Credit unions are often insured by the National Credit Union Administration rather than the FDIC, NCUA.